major story for the U.S. life annuity sector in 2015 is, for the most part, more of the same, as the record low interest rates that have been a boon for borrowers remains a major headache for insurers, many of which have redesigned and repriced products offering less generous features. But technological investment, regulatory shifting, and declining life insurance ownership also remain part of the shaky terrain.
There's an improving economic picture domestically, and that has also led to a number of different issues. So despite many of the headwinds, we're still seeing relatively stable trends.
Generally speaking, underwriting appears to be rational, with rational pricing, continued improvement in the areas of the risk management framework with respect to hedging and ongoing product de-risking. The challenges are mostly centered more around the growth challenges. The top line is, muted at best. There's challenges in penetrating the life insurance market, which remains terribly underserved and underpenetrated. There are lots of opportunities, however, more so on the annuity side. Big data, predictive modeling is a big area of opportunity and challenge for U.S. life insurers that we expect to hear more of in the near future.
Even though we see that the domestic economic picture is improving, one of the biggest challenges that life and annuity companies have is the ongoing low interest rate environment that's been a headwind for a number of years, and we see that continuing into 2015. We also have seen a relatively strong equity market performance with relatively low volatility. So a return to volatility, somewhat what we've seen already through the first part of 2015, would be a challenge for the life annuity segment. And another area which is a potential headwind is just regulatory uncertainty. We've seen a number of different areas where companies are trying to prepare to their best ability, finalization of regulatory rules related to captives, principal-based reserving, as well as ongoing development in terms of capital standards. The retirement space is an area where companies continue to focus.
The U.S. Treasury has revised rules allowing for retirement income-based solutions.
There's also opportunities internationally for companies. The larger companies are focusing beyond the domestic market, higher growth areas within Asia, as well as some areas potentially in Africa as well. There's also opportunities in the pension risk transfer market domestically as well as internationally.
We're seeing growing interest in the area of deferred income annuities, which would typically kick in at, say, age 85. I do think that predictive data and data mining and predictive modeling is going to be huge in trying to penetrate the lower tier market. You will probably see more innovation around the utilization of those disciplines, not only in sales and marketing, but also in underwriting, customer selection, and persistency.
The biggest potential area that would cause a change to a negative outlook would be more on the macroeconomic level. In other words, the overall improving economy would start to deteriorate through some either domestic issue or some pressure internationally, which would cause that to shift.
If there were to be a material increase in longevity risk vis-a-vis cures for cancers, significant drug advancement in the biotech area, that would potentially be a negative for longevity type business that's currently being underwritten through PRT and longevity swap transactions. However, it would be a positive for mortality riders. A continued long decline for a long period, another 5 years or so in interest rates would also be problematic. On the positive side, I would say that a modest increase in interest rates, a gradual and measured increase in interest rates would be a net positive for the industry, as well as the real build out of predictive analytics and data mining capabilities.
We'd like to thank AM Best for their contribution to our program. If you'd like to see more of the First Monday series, visit the AM Best website.